Imagine this. It's 3000 BC. You're not behind a computer. You're hunched over a slab of clay, hammering trade records into stone with a sharp stylus. One mistake, time to grab another rock. No undo button. Just saw arms. Welcome to OnlyDisrupt. Today, we're jumping through history to explore how accounting went from literal stone tablets to artificial intelligence. From ancient scribes to smart software, it's been a fascinating journey of tools, transformation, and technology. Chapter 1. Clay, sand, and beads. We start in ancient Mesopotamia, the cradle of civilization. Around 3000 BC, Sumerian scribes were the original accountants. Their job? Keep records of trades, taxes, and livestock. Their tool? A stylus and a fresh slab of clay. They used cuneiform script to carve out every number and symbol. These were more than doodles. These tablets were contracts, receipts, and ledgers. Some still survive today. Next stop, ancient Egypt. They traded in clay for papyrus scrolls. Writing with reed pens, Egyptian scribes tracked harvests, taxes, and labor. Their work helped manage an empire. To help with calculations, they used simple bead counters, early versions of what would become the abacus. Then came the Romans. They refined the abacus into a go-to calculator, small, portable, and fast, perfect for merchants and tax collectors. It was accounting on the move, Roman style. If a legion needed to track supplies or taxes, the abacus was there to help. Chapter 2. Ledgers and Logic. Move ahead to medieval Europe. Trade is booming. Merchants need a better way to track who owes what. Enter the bound ledger book. Page after page of handwritten entries. Every sale, every debt, it all got inked into the books. Mistakes were common. If the numbers didn't match, they'd draw a red line through the error. That's where the phrase "in the red" comes from. But the real breakthrough came in 1494. That's when Luca Pacioli, a math-loving Italian monk, published a book called Summa de Aritmetica. Inside was a revolutionary idea: double-entry bookkeeping. Every transaction had to be recorded twice, once as a debit, once as a credit. The books had to balance. No exceptions. This system became the backbone of accounting. It spread across Europe and became the global standard. Even today, it's the foundation of modern finance. Chapter 3. Machines in the office. Now we jump into the 19th century. The world is industrializing, businesses are getting bigger, and calculations are more complex. People needed help. Enter William Burroughs. In the 1880s, he invented the adding machine, a mechanical device with gears, levers, and keys. It looked like a cash register. You pressed the buttons, pulled the handle, and it crunched the numbers for you. These machines saved hours of manual math. Offices buzzed with their clicks and clacks. For the first time, accountants had a tool to speed up their day and reduce mistakes. By the 1950s, computers started showing up. Massive, room-sized machines with blinking lights and humming fans. Mainframes like Univac were used to handle payroll, ledgers, and audits for large corporations. They were expensive, slow, and required specialists to run, but they were faster than humans. This was the start of true automation. Chapter 4. The Spreadsheet Revolution. Then came 1979. Personal computers hit the market, and with them came VisiCalc, the world's first electronic spreadsheet. It ran on the Apple II and changed accounting forever. No more erasing ledgers by hand. Now you could update a single cell and the whole sheet recalculated. Accountants were amazed. Businesses bought computers just to run VisiCalc. The 1980s brought Lotus 1, 2, 3. Then Microsoft Excel took over. Accountants could sort, calculate, and analyze with ease. No need for rows of paper or mechanical machines. Meanwhile, small business owners got a new tool, QuickBooks. Launched in the early 80s, it helped them track expenses, run payroll, and manage invoices, all from one program. Suddenly, accounting wasn't just faster, it was smarter, more organized, and more accessible than ever before. Chapter 5. Cloud and AI take over. Fast forward to the 2000s. The internet changes everything. Software moves from your hard drive to the cloud. Now, tools like QuickBooks Online and Xero let you work from anywhere. You can check your books on your laptop, tablet, or phone. Collaboration became seamless. An accountant in one country could work on books with a client in another at the same time. But the real leap came with AI. Today, accounting software doesn't just store data. It reads, learns, and helps you make decisions. OCR, optical character recognition, scans receipts and extracts details like date, amount, and vendor. AI algorithms categorize transactions. detect fraud, and match bank records automatically. They get smarter over time. They spot unusual patterns, flag suspicious activity. It's like having a 24/7 assistant watching your books. AI can even answer your questions. How much did we spend on office supplies last month? Or are we on track to hit our revenue goal? Accountants today aren't bogged down with data entry. They're advisors, analysts, and strategy partners. The tools do the heavy lifting. People add the insights. So what's next? From stone tablets to cloud apps, accounting has always moved with the times. Each leap brought more speed, more accuracy, and more value. Now, we're in a world where AI doesn't just assist, it learns, it recommends, it predicts. So what's next? Will we see full AI-led audits, real-time taxation, blockchain-powered ledgers shared between governments and businesses? One thing's for sure, accountants will keep evolving. From scribes with chisels to strategic advisors with dashboards, the profession is transforming. And the story isn't over yet. Thanks for watching OnlyDisrupt. If you enjoyed this journey, stick around. We've got more stories from the edge of business and technology coming soon.